Hey everyone, welcome back to Lunch at the Market. It's not a terribly exciting day. We only have about three positions left on for OPEX. Normally, we like to press more of our positions fully into today, meaning we're just short all the way and we're not going to cover until we see the white of their eyes. But we've been in a terribly choppy market. I mean, all over the place. We've basically been in a range between 1300 and 1330 on the S&P. And when we get too close to 1300, we go back up. When we get too close to 1330, then we go back down. And it's really been the same trade over and over again. So what's really nice about that is you have very defined entry and exit positions, meaning the closer you get to 1300, the easier it is to lay out spreads or to get long. And then you got to take things off or hedge when you get to the top of the range. So it's, again, the trading range is going to hold until it doesn't. I know it kind of sounds like a Dennis Gartman comment, right? They ask him how long something's going to last, and he says until it ends. And that's what we're saying. Right now, the range lasts until the range is broken. So play it until something happens. Either A, it breaks further to the downside and goes through that 1300 level, at which point I don't see any reason not to test that 1250 level again. And then on the upside, if it breaks 1330, I would expect your next stop to be 1340, but again, we could break to new highs. It just depends. But for right now, I think that the trend is that that range that we're stuck in right now holds. So other than sitting watching our last three names into the close, in which we're about 10% away from the strike price that we're short to where the stock currently trades. So we need a pretty darn big move in most of these stocks where we're short put spreads in order for us to get concerned. So we're not going to be concerned for right now. We'll watch those into the close. And hopefully after the summer passes, if we can get some kind of trend, then we'd feel more comfortable pushing our bets into the day of options expiration. But as it stands right now, the safe thing to do is when you get up 80 and 90% on some of these spreads, just take them off the table because the averages are moving so fast between the range that you're going to want fodder, right? If you sold a 10 lot for $1,000 and it costs 200 to buy them back, and you don't, you're basically saying that extra $200 I think I'm going to make is worth more than selling another 10 lot at 1,000. And so the risk reward becomes not really there. We've taken a look at the trying to sell call spreads, and the reality is that with down around the bottom of the range, the risk is then that the averages move back towards the upside and they take most of the stocks with them. And so we don't really want to get to the point where we're selling a bunch of call spreads until we get up near the top of the range, at which point we would feel much more comfortable selling call spreads above the recent ranges. So if a stock, take for instance Google, the highest really of the recent range is close to $600 a share. Like 593 is where it kind of broke down at before it started trading lower. If the stock approached 575, 580, then we would want to sell, like, say, the 600, 605 call spread or the 610, 615. But the problem is if you try to sell that spread now, you're going to get like 22 cents. And there's just, for $5 of risk to take in 22 cents, it just seems like a pretty bad risk reward. That's just us. You can do what you want. But for us, that seemed like a terrible risk reward. Although on the other side of the trade, obviously with Google stock down like $40 a share, so you look at an options chain, right? Puts are on one side, calls on the other, and we basically move down the chain until we could get $1 for a $5 wide spread, and then that's where we sold our put spreads this morning. It's basically the same trade that we put on for Goldman Sachs yesterday. We didn't do as many of the Google trades, so full disclosure, we sold much more Goldman Sachs put spreads than we sold in Google today, but we feel very comfortable selling that Google put spread. I'll let you do the homework because the stock's kind of all over the place today. So basically just start right at the money put spread, put a $5 spread together, and then keep changing the strikes until you see that you get to $1. Then try it one more time, see if you can still get $1 for that spread, and then once you stop getting $1 for the spread, move back up one more strike on that $5 wide spread, and then sell that spread out into May. We'll see where the bottom is, but Google already trades with like a 13.5 PE and a PEG of less than 1. They've got $108 a share in cash on their balance sheet, and that is quite a lot of firepower. They only have $5 billion in debt compared to let's see what the number is. I know the debt was $5 billion, and it looks like in cash they have $34.98 billion. They have quite a bit more cash on hand than they do on debt. So we're comfortable with all the valuation metrics of the stock. Just be aware that Karen Feinerman said that right now she sees Google as a value trap rather than a value trade. But she did say that Larry Page, the founder turned CEO, who just took over recently the reins of the company, that he should really be given the benefit of the doubt, and that we're going to have to see 3 or 4 more quarters from him before we say, hey, the guy just doesn't know what he's doing. So for right now, he's getting the benefit of the doubt from a lot of smart people, even though Karen's not willing to invest capital in the stock. She is willing to say that Larry Page isn't a total screw up and that he's taking the company into the trash. So valuation is really attractive, which is what gave us the confidence to go ahead and sell those spreads. And the stock has already dropped a ridiculous amount, certainly on a per dollar basis. And the most recent high was around, 593. And so with a stock trading around 535, you're down about $60 a share, which is better than 10%. That's a huge move in a very short period of time. And if you go back a little further, the stock was trading around 630, 640. So this is about $100 a share just lopped off the top of the stock. You have to ask yourself at some point, if Google's business isn't materially worse, which it's not, and we're going to go back and listen to the conference call, there's really no reason to believe that this company just falls forever. Okay? Eventually, value managers will come in and say, look, getting close to no longer being a teenage price to earnings multiple, let's buy the stock. So we think there will be a natural bid for the stock if it continues to drop any further. And again, we're quite a few dollars away from where the stock currently trades, where we ended up being short the put spreads. Just keep in mind that May's options expiration is a full 5 weeks from today's date, a full 5 trading weeks. So it is longer than some of the options expirations that we've had so far this year, like this month in April, and then February was a short one, I think, as well. All right, so just in time for the weekend, Pete Najarian's America's Favorite Traders episode is now available. Remember, you can download it on iTunes absolutely for free by searching on iTunes for America's Favorite Traders. Download it. Don't forget to subscribe. That way you'll get updates as soon as a new episode's ready. You're going to get an update. You're going to love this. If you like sports at all, even a little bit, you're going to want to listen to this episode of America's Favorite Traders. Pete was unbelievable. You have to find out how Pete almost became a professional wrestler and what the heck stopped him from becoming a professional wrestler. Also, you got to find out how long this guy's goatee was when he started out at CNBC and why he thinks Chad Ochocinco is just a total loser. All right. All that and more can be found on America's Favorite Traders. If you're a sports nut, you're absolutely going to love this. It's pretty much like an episode of Stocks and Jocks, which Pete, Guy, and John do every weekend. It's a ton of fun. We had a great time on the episode. Thanks again for watching us on another week of America's Favorite Traders. Have a fantastic weekend, and we will see you on Monday.